from Michigan, Mr. Huizenga, the sponsor of the legislation, for 5 minutes.
Thank you, Chairman Henserling, and appreciate Ranking Member Waters as well as we debate and consider H.R. 3211, Mortgage Choice Act. As someone who's worked in the housing industry and construction with my family for a number of generations now, this is an important issue to me and more importantly to our constituents. Earlier this year, the Qualified Mortgage QM ability to repay rule, as mandated by Dodd-Frank, went into effect. The QM rule is primarily means for mortgage lenders to satisfy their ability to pay requirements. Additionally, Dodd-Frank provides that a QM may not have points and fees in excess of 3% of the loan total amount. As currently defined, points and fees include, go through kind of a list here, sorry, Mr. Chairman, but I think these are important to enumerate. Among other charges, one, fees paid to affiliated title companies. Now, that does not count, though, to unaffiliated title companies. Two, salaries paid to loan originators. Three, amounts of insurance and taxes held in escrow. Four, loan level price adjustments. And number five, payments by lenders to correspondent banks, credit unions, and mortgage brokers in wholesale transactions. As a result of this problematic definition, many affiliated loans, particularly those made to low and moderate income borrowers, would not qualify as qualified mortgages, QMs, and would be unlikely to be made or would be only available at higher rates due to heightened liability risks. Consumers would lose the ability to take advantage of the convenience and market efficiencies ordered by one-stop shopping. And I can tell you that for me in my district, the 2nd District back in Michigan, I'm home to the highest Hispanic population in the state of Michigan of any of the congressional districts. We have a large African American population, and one of the 10 poorest counties in the nation, Lake County, resides in my district as well. And I'm very concerned about the ability for access for everyone who is looking to grab a piece of the American dream. So with that, I, along with Representative Gregory Meeks, introduced H.R. 3211, a strong bipartisan bill that modifies and clarifies the way points and fees are calculated. This legislation is narrowly focused to promote access to affordable mortgage credit without overturning the important consumer protections and sound underwriting practices required under Dodd-Frank's ability to repay provisions. Specifically, H.R. 3211 would provide equal treatment for affiliated title fees and clarify the treatment of insurance held in escrow. These common sense changes will promote access to affordable mortgage credit for low and moderate income families and first-time home buyers by ensuring that safer, properly underwritten mortgages pass the QM test. And I'd like to thank my colleague, Mr. Meeks, along with the many others who have worked tirelessly to help fix this flawed provision currently being implemented. And Mr. Chairman, I urge swift consideration and passage of H.R. 3211, the Mortgage Choice Act, to help ensure that consumers have that greater access to mortgage credit and more choices in their credit providers. I'd like to also request unanimous consent to enter in letters of support from the following: American Bankers Association, Community Mortgage Lenders Association, Consumer Mortgage Coalition, Credit Union National Association, Leading Builders of America, National Association of Federal Credit Unions, National Association of Home Builders, Mortgage Bankers Association, Real Estate Services Providers Council, the Mortgage Bankers Association, National Association of Realtors, and the Realty Alliance. So,
without objection.
And with that, Mr. Chairman, I yield back.
Gentleman yields back. Who seeks recognition?